In this video, guys, we're going to look at the problem with the KISS method. Stay tuned. Hey traders, a warm welcome to you. So KISS stands for Keep It Simple, Stupid. Now, this really is a really kind of supposedly funny way of saying just keep your trading decisions simple. If the market's going up, trade long. If the market's going short, or market's going down, trade short or stay out. Okay, and now I've talked about this in videos before and I've said, hey, it's so important to keep it simple. And I'm a believer in this, especially if you're a beginner. Keeping it simple is a great way of starting. However, if you're an intermediate trader, if you're an advanced trader, you know it's not quite as simple, pun intended, as keeping it simple, is it? Because yes, we may want to only align ourselves with, we want to be long in an uptrend. Of course we do, and I'll be short in a downtrend. And that sounds so great. And I can stand here, and there's YouTubers who stand here and say this, and I've probably done it in some videos before. And this is the easy thing to do, guys. I never said it's the easy thing to do. If you're subscribed to the channel, you know that I really do give it to you straight. It's not an easy game, this, but there are people who say, hey, this is easy, just align yourself long, align yourself short, everyone's happy. And as I say, beginners definitely, keep that in mind, no overcomplicating stuff, because beginners will put indicator there, put oscillator here, they'll put standard deviation, Bollinger Band here, they'll have this signal, that indicator, that one, they'll just be bombarded. And I definitely think keeping it simple, but intermediate, advanced, guys, this is the case, right? You can't just go long in an uptrend, pick your spot and hit it, because there are so many other things think about. What about the ATR? If we are in a day, let's say we're in a day or a week and we're already at 1.5 ATRs in the day or the week, are we going to go long here? Probably not, because the likelihood of it going much further are quite slim, unless we have, of course, a catalyst, and if we have something that's given us reason to think the ATR is going to be extended. Again, this may be, keeping it simple may be great for beginners, but when we start to add more layers to it, we can't just keep it simple. There have to be some other rules in place. ATR is a perfect example of that. Are we going to be buying on the top end of a trend? We've had 1, 2, 3 pullbacks, 1.5 ATRs up. Are we going to be buying blindly on the top? No, we're not. We're going to still want to position ourselves long, but probably the better trade is to wait for a bit of a decline, maybe a double bottom, something like that. Trade off that and go long within the frame of keeping it simple, i.e. we're in an uptrend, we want to stay long, but not keeping it so simple that we're just throwing an execution dart at the highs when finally we think it's gone up enough. So there's that kind of stuff. Then we have other things like, okay, keep it simple. We want to only buy breakouts, or we only want to trade head and shoulders. So again, we can look at this and say, okay, we only want to, let's keep double bottoms right here, double bottoms. Now, double bottom, classical chart pattern, very, very simple. It's kind of charting 101. It's double bottom. We understand that it's tagged once, tagged again, hasn't penetrated below the low. That becomes a support level. We buy there, off we go, the score. Okay, but that's all very well, and we keep it simple, that's fine. And in this context, that's great, because we're in an uptrend. Now, if we're in another context, i.e. we're coming in a downtrend and we have a double bottom, and people are saying, yeah, just keep it simple, stupid, just trade the double bottom, buy the double bottom. Look at the difference between two. And this frustrates me a little bit, because I get annoyed that people don't see the difference in this, or people are saying, hey, it's the same thing. It's not the same thing. That is nowhere near the same as that. We've had a downtrend. A double bottom at the end of a downtrend is nowhere near the same as a double bottom that appears in an uptrend on a pullback. That one is probably likely to hold and do a hell of a lot better than this one. So the people who are keeping it simple, stupid, and are buying the double bottom are saying, hey, this is great, this is great. And all of a sudden they come along, they see exactly the same pattern, a mirror image of that, but just with this in a different scenario, in a downtrend. They buy that double bottom and they wonder why they get slaughtered. They buy it again, they wonder why they get slaughtered. They're not looking in the context of things. So yes, whilst we want to keep trading simple, there are some additional rules that we have to put in just to keep ourselves on the right side of the market. I'm a big advocate of keeping it simple, but within reason. And the people that say, hey, it's very, very simple, we can just go long in an uptrend, we can just go short in a downtrend, You know, if you've been trading, that's just wrong. It's not true. You know that there has to be some more to it. That's a great example of it. ATR is a great example. Using that same with indicators, you know, buying a moving average crossover. I've done videos where we've talked about analyzing different setups and strategies that people have got online and talking about them and the pros and cons of them. And very often we look at them, we say, you know what, if you follow them, they're not going to be that great. However, they are a good foundation to build off, to filter. So a crossover now aligns you long. Let me now find something else. We can't just keep it simple and just pull the trigger on a moving average crossover going long, but we can say, okay, now I'm going to filter trades just looking for longs. What am I going to look for? Maybe I'm looking for an uptrend, double bottom with an uptrend. You get the idea. So keep it simple, stupid. If you're a beginner, yes, definitely keep it simple. But if you're more advanced, more intermediate, you need to think, okay, I want to keep things simple. I don't want to overcrowd myself with loads of noise and decision making in terms of indicators and stuff, but I can't just keep it so simple that I'm ignoring kind of extra rules that I know are going to align me with better, more profitable trades. All right, guys, take care, whatever you're trading, and keep the risk managed. Bye-bye.